Okay, folks, welcome to Thursday Night Stock Charts Live. This is Bob Desmond, and what we're going to talk about today is a follow-up to last Saturday's best stock charts for the new trading week. We began last Thursday talking about the new trading week, what we liked, what we didn't like, and I focused in on the software stocks. In particular, I was looking at Datadog, uh, Cloudflare, CRM, that's salesforce.com, MicroStrategies, and Microsoft. Today was a down day. I haven't looked at these names yet. And we also discussed IGR, which was the ETF. And I took the components out of the IGR ETF and I filtered them through TrendSpider, and they spit out these great names that had Bollinger Band squeezes setting up that were looking really, really good for the new trading week. And I know for a fact the IGR, the ETF itself, is up. I know because I bought it this week. So we're up on that trade. We're doing well. We'll talk about the seasonality. We'll remind people about the seasonality of the software stocks in a moment and how they outperform the triple Qs, S&P 500 in the month of October on a seasonality basis, perhaps not a percentage basis, but on a seasonality basis over the course of a number of years. We're also going to talk today about today's economic data. Now, today's economic data, we had initial jobless claims, which we get every Thursday, and we got a hot number, meaning a spike in initial jobless claims. I'd say about roughly 2 months ago, give or take a week, and then it kind of plateaued. It leveled off. It came back down again, and all of a sudden we just went right back up again. The problem is that at the same time as the initial jobless claims were being reported, we had CPI. That's consumer sentiment. Excuse me, consumer sentiment. The consumer price index. That's a measure of inflation at the consumer level. And tomorrow, being Friday, we're going to get PPI. That's the inflation gauge or inflation measure at the producer level. Are producers seeing costs rise? Are they passing those costs onto the consumer, or are they absorbing the cost, thus impacting their bottom line? And even if they push the cost onto the consumer, are the consumers still buying? So we're entering a very, very serious stage here for the Federal Reserve. And we're going to go over the Fed Watch tool in a moment to talk about how this data influenced market participants with how they planned on, or how they were betting that rates were going to go on November the 8th. Was the Federal Reserve going to cut? If so, was it going to be a quarter point? Is it going to be a half basis point? So today was a very, very big day. And this morning, when they reported that number, I put an alert out there. I heard the numbers, and I rarely initiate new trades before 3 o'clock. When I do, I usually regret it. And I never, not in recent history, do I open up a trade on economic data, a report, because the knee-jerk reaction is usually the wrong reaction. The however is, I'm so trained to think about the macroeconomics and how what position the Federal Reserve is in right now, that once I saw the Fed Watch tool, it gave me the answer to the question that I was asking. So what's the question? The question is, if initial jobless claims come out hot, meaning higher than expected, and the consumer price index comes out higher than expected, what's the Federal Reserve going to do? Well, we look at the Fed Watch tool, and it's going to tell us. And I posted, let me share my screen. I posted in the members forum before the economic data was announced, and I wanted a timestamp the What time did I post this? Doesn't give me a time here. It was early this morning, very early this morning. So going into the economic data today, we had the probability of a rate cut to a quarter basis point at 76.2%. Okay. Then you fast forward to the close of the day today, and that number, here we go. That number went from 76.2 to 86.9. So what is that? What do you interpret by that? And that grew in strength by the end of the day. But once it hit 80, I saw it going up higher. I knew I had to buy gold. I bought gold futures right at the open. Boom, right at the open. Actually, before the market opened at 9:30, it was very early, right after the economic reports were laid out. I gave it a few minutes. I wanted to see what the Fed Watch tool would do. Would it tank due to inflation being hot, or would it move up higher with a probability of a rate cut, given the fact that initial jobless claims spiked up higher? Well, you could see what happened. So what the Federal Reserve is going to do, because they never disappoint this tool, never, ever. What they're going to do is they're going to cut. And they are going to let loose the hounds of inflation on this economy. And we have charts to go over in a few minutes. So first, let's say hello to folks. I should have checked the comments. For all I know, my audio is not working. I rely upon you guys. Franklin, welcome. Danny, welcome, my friend. Larry, Jedi Kid. Shirt is very hollow. Yeah, I was feeling it today. I said to myself, Self, what will you wear for the show tonight? And I said, let's be festive. I closed my pool today. Pool's done. Leaves are coming down. They're changing color. I'm in the mood. This is it. Boom. Talon. I just saw the back half. I just saw the back. This is the mask. You know, you don't want to have to look at this thing too long. What you're looking at is my mask. Talon, welcome. You're getting scared. Yeah, I dropped 5 pounds as of last Monday since Sober October began. And I'm probably down another couple of pounds now. So probably about 7, 8 pounds now in the past, since the beginning of October. So yeah, still doing Sober October. God darn, I could look forward to a nice single malt scotch right now, but what are you going to do? Beautiful night outside, crisp night outside, great night for a cigar, great night for a single malt. But we got to go with our discipline. Talent, he's getting leaner, not skinny. Oh, man, music to my ears. Music to my ears. Thank you very much. Danny knows how to play me. Good stuff. Plays to my ego. Love that. Yeah, I know you mean. I know you mean Talon. My man Talon. Franklin, since you closed the pool, what did you do with all the ladies? They're out shopping. That would be my wife and my daughter. They're out shopping. Since there's nowhere to hang by the pool now, as a matter of fact, they took the female dog. I have 2 dogs, Mina, the Aussie, the mini Aussie, and they took her. They're out spending money. So, yeah, what do we do this for anyway? Okay. So let's get into it. Let's talk about first, how many people do we have on? It's only 16 people. I think I'm going to change up the Thursday night format a bit. I think we could get a little bit more engaged. What I'm thinking about doing is potentially, I'm flirting with, and give me your thoughts on this, a Zoom meeting and having a more engaged session, smaller group session, but inside the forum. And I could do that quite easily because I want to begin to create event. I could Zoom. I can meet by Zoom or do a webinar. I could do any number of things here and have a lot more engagement with people, answering questions. They could submit them in advance. We'll go over them together, have a back and forth, hear people's voices. I want to switch it up. I have the technology now, and I want to use it. Shot of Papa Van Winkle for you. Does that have anything to do with my beard? Barbara Wall, welcome. Okay, so if you're not part of the forum, let me throw this in there. Sign up. It's free for now. And make sure you invite a friend, just as I'm doing right now. So if you're not in the Contrarian Trader Forum, that means you're not in the Bull and Bear Banter chat room. Great people in there, far better than me. And what else did I need to go over? Oh, we're being sponsored tonight by our very, very good friends over at TrendSpider, folks. So please head on over, check them out. Here's the link. You can find the link below as well. And it's just a great piece of software. The charts that I did for best stock charts for the new trading week, I identified through TrendSpider's scan. So Datadog, Cloudflare, CRM, MicroStrategies, and Microsoft. No, I had Microsoft. I already knew what that looked like, and that's not a Bollinger Band squeeze. So I picked all those names out from TrendSpider. I also picked off. I already owned it. I was focusing in on the Bollinger Band squeeze on SoundHound, but it fired off today, and I got a signal on TrendSpider, and that's what caused me to enter that trade even heavier than what it was yesterday. So we doubled up on our position on SoundHound today. You know what? We'll go over that chart as well. And Franklin, I have your request. If you're already in the, if you've already subscribed to the forum, make sure as Franklin has already put his symbols in here. Members can enter them into the members area, or they can enter them here. I don't care. But if you're not a member of the Contrarian Trader, you need to enter your symbols here. Use the link I provided. Head on over, throw them in there. I'll do a refresh before we do the chart request. Let's get to it, and let's talk about today. Before we begin, I want to play something because I'm going to forget. And I find this absolutely shocking. In resurfaced clip, Kamala Harris fantasizes about weaponizing the DOJ against misinformation. Am I sharing my audio? Hold on. Let me make sure I'm sharing my audio. All right. I should be now sharing my audio. I will begin that from the beginning. This is scary. I'm still getting used to the camera being over here. This is scary, folks. Listen to what she's saying. This is a few years ago. Have a listen.
I learned, I think I was, 22 when I started that work. I learned that with the swipe of my pen, I could charge someone with the lowest level offense. And because of the swipe of my pen, that person could be arrested. They could sit in jail for at least 48 hours. They could lose time from work, and their family maybe lose their job. They'd have to come out of their own pocket to help hire a lawyer. They'd lose standing in their community. All because of the swipe of my pen. Weeks later, I could dismiss the charges, but their life would forever be changed. So I learned at a very young age the power.
I'm sorry, folks. I try not to bring politics into this as long as it doesn't have to do with the markets. Uh, this woman, this woman cannot be president of the United States. Uh, she cannot be president of the United States. I'll share this out. Share it with a friend. Those are her words, not ours. Hey, Bob, looks like Florida will be okay. Yeah, I have a bunch of family down there, and I was kind of upset with my brother. He stayed down in Tampa. He lives right on the lake, and I wanted him to get out of there. My uncle did get out of there. I checked in with all my family, and I got a hold of everybody. Sean, glad to hear you're doing okay. Yeah, agreed, man. Agreed. She cannot get in. Um, she has no idea. She has zero empathy. Zero. There's no empathy there. And you can't have that type of person in power. I mean, she has zero, she understands the power that she could wield. She doesn't understand the damage that it does to the people at a personal level. So that lack of empathy just accentuates the narcissistic tendencies that she has. So she cannot become president of the United States. So please share that out with the rest of your friends. Jay Shaw, hey, she's pretty much said it. That's what she wants. This is what the Democrats want. Okay, let's talk about the economic data today. Let's talk about it for the week. And we had some Fed heads out earlier in the week. Consumer credit. This is a problem, folks. It may sound good. It is a good thing, but we need to take things from the perspective of being traders, being at least long of the market. If you're long of the market, you do not want to see this. Now, the other side of the coin is that if you're a human being and you are, if you are disciplined in your expenses, and you're looking at your neighbor who is not disciplined in their expenses, and they've stopped using so much credit card debt, well, good for them. Pay down that debt. Don't make investments. Pay down the debt first, because you're not going to make 20% guaranteed anywhere else. So pay down the debt. If you're thinking about joining the contrarian trader and you have credit card debt, you're not ready. Pay down the debt. If you're thinking about getting TrendSpider, you're not ready. Pay down the debt. Get rid of that debt, because the opportunity loss that you're going to see in the future is you'll never know what that is, because you're not going to have the ability to be flexible. Get rid of the debt. So getting back to this, remember that like 3/4 of the U.S. economy is based upon a healthy consumer. The last thing the consumer is healthy. They're on a lifeline of credit card debt and handouts from the government. So when you see that the federal government out of FEMA can only give $750 to qualified people, not to everyone, if you're qualified, well, you know they're bust. They're done. So forget about the government helping Americans. They're out of the equation. So now you're relying upon the banks not to tighten up on credit lines, which they're going to do. And once you see that, you know it's the beginning of the end. We saw it back in 2008. Bank of America did it with me. I had very little debt on my account, but they took my credit card credit limit from, I don't know, it was like 20,000, 25,000. They took it all the way down to 10,000 overnight. I hardly had a balance with them, but they were reducing their risk. They knew what was coming. So the fact that people aren't spending on credit card debt, what does that mean for the retailers? They're going to get clobbered. What did the port strike do? Or the dock worker strike do? It didn't help the retailers. So they're going to have supply chain issues. They're going to have credit card debt that is not being accumulated as it once was. Good luck for the retailers this year. So moving on. This is not really what I wanted to talk about. I'm looking at the other data. This is the first time I looked at this all week. So here we go to today's initial jobless claims. So the expectation was for a read of 230,000. That would be up 5,000 from last week. They came in at 258,000 new jobs. Now, here's the 4-week moving average of initial jobless claims. And you can see the spike here. That was COVID, right? And this really looks benign. It really does. And from a max view or a 10-year view, it looks benign. It looks like, you know what, we're doing okay here. We're not doing horribly, and we're not. We're not. The problem is when you start identifying trends. And so when you begin to drill down here, things begin to change. We were stair-stepping higher. Am I in a 1 year? Yeah. Okay, good. Stair-stepping higher. We pulled back. Now we're beginning to put in new higher highs. If we take out the highs of August the 3rd of this year, things are going to get real fast. Because that means that the Federal Reserve is going to have to cut interest rates very quickly. And what did interest rates do on the 10-year yield today? Well, one would think the probability of a rate cut, of course, they would go down. The Federal Reserve is going to cut rates. You just showed me, Bob. Bob, you just said it. What you answered your own question right here. The probability of a rate cut went up today. Very true. There's only one problem. That has nothing to do with the 10-year yield. Zero. That rate cut can only impact the Fed funds rate, very short term. It has no impact on the 30-year, the 10-year, the 20-year bonds. So what did those bonds do? They went up. Why? Because other countries are saying, you guys are going to cut rates? Your inflation's going up. The dollar's going to drop. What did the dollar do today? Close flat. I think we have a top in here on the dollar. So what else we got out today was this CPI. It came in hotter than expected. Sorry, CPI here. I'm looking at the core, PPI. Core CPI. The headline number was 0.2%. They're expecting an increase of 0.1%, double than what was expected. At the core, ex food and energy. Excluding food and energy, it still came in a third higher than what was expected. Now, keep in mind this. The year-over-year number, expected 2.3%. The prior read was 2.5%. The expected was 2.3%. Year-over-year came in 2.4%. Inflation year-over-year on the CPI is up. And they just cut 50 basis points. You know what that's going to do to inflation? It's going up. Core CPI year over year, 3.3 versus 3.2. I thought we beat inflation. Didn't Fed Chair Powell come out in Jackson Hole a few weeks ago and tell us that all is right with the world? We killed inflation. Don't worry about it. We're good. Barbara, core inflation closer to 4% than 2%, less energy dropping, CPI cooler than core shows. Yeah, these numbers are all nonsense. They're all nonsense. The numbers that they calculate today for CPI are completely different than what they counted as CPI back in the 1980s. This time last year, they counted in coffee and CPI. You know how to just say coffee? That's my Brooklynese. It slips in quite often. I'm sorry. My apologies. Very unprofessional. I'm supposed to be a professional here. I let that slip through. My apologies. Forgive me. CPI included last year coffee, and this year it does not. What do coffee prices do? Oh, let's take a look. What are coffee prices doing? I don't know. Let's take a quick peek. I could guess why they wanted to take out coffee. Oh, look at that. Look at that. Multi-year highs. Go figure. Why would we want to back out coffee out of the CPI? Well, let's just back it out. Nobody drinks coffee. Oh, God. We're so screwed. We're so screwed. It's, you can't make this stuff up. And CNBC won't talk about it. They don't talk about it. Getting back to the consumer and inflation for a moment. Here is the CPI. I wish I could, let me have this summarized. You know what I'm going to do? I know what I'm going to do. I'm going to bring over some GPT. Let's have them summarize this. Okay, this chart here, the consumer price index for all urban areas tracks the cost of a basket of goods and services that urban consumers pay. It measures inflation through the percentage change in prices over time, often compared year over year, covering about 88% of the population. It includes workers, retirees, and others not in the workforce. The CPI is based on essentials like food, shelter, services, collected monthly from housing unit costs, blah, 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 blah. Prices are averaged and weighted to reflect their importance in consumer spending. Does this look like we have crushed inflation? Obviously, this goes back to the 1940s, to be fair, but take note of when inflation really took off. Right here. What happened in 1971? What happened in 1971? Here is the 5-year view. Here's the 5-year view, folks. I thought they beat inflation. They're cutting rates now. So what the Federal Reserve is doing, there's a house that's on fire, our house. We paid for it. They didn't pay for it. They borrow against it and lend it out all over the world to people who are never going to pay us back. So they're coming over. That house is now on fire, and they have a part-time job as a volunteer fireman. So the Federal Reserve, they play Fed heads during the day, volunteer firemen at night, and they come over with a bucket of gasoline and throw it on our fire, which is our house. This is what they are doing. They are unleashing the hounds of inflation on the economy. But why would they do that? Why would they do that? Several reasons. One, election year. And you may be saying, Jay Powell is a Republican, Bob. Jay Powell is a Republican. You're completely wrong. No, he's a bankster. His role in this world, his legacy is going to be leaving the Federal Reserve better than what he found it. The Federal Reserve is supposed to be a quasi-independent government agency. If they want to maintain their independence, they will do the bidding of the incumbent party. That's the game that gets played. Don't hate the player, hate the game. 2, legacy. How much longer is Fed chair going to be around? Fed chair Powell going to be around? Trump crushed him in 2018, forcing him to cut rates. Force him to cut rates. He's not going to probably want to stay around much longer if and when a President Trump gets into office. 3, why does the government like inflation? Think about it for a moment. Why do they like inflation? Well, they have 2 things that they could do. One is they could raise your taxes, but then they got to get reelected. But there's another thing they could do. They can let inflation run rampant. They're good. They're trading stocks on inside information, and it's legal. You and I do that, we're going to jail. Do not pass go. You're going to jail for a very long time. Martha Stewart style. So they want inflation so they could tax the product. They get more taxes on the product. They bring in more revenue. That's why they call inflation the hidden tax. That's what they want. They're confiscating our wealth vis-a-vis inflation. And they could say, it's not me. I voted for that package. That's what they're going to do. They'll put up so much dust, confuse the voter, and they're still going to vote the same people back into the office as they always do. This is the reality. Let's talk about retail sales. Here's retail sales going back to 1992. All right, so pretty steady stuff here. But we've never, ever, maybe a little bit back here before we crashed, put in, but this is much longer. How many periods is this? This is April of 21. That's almost 3 years. Jan of 06. That's only a year. This is 3 times longer, this base here, on retail sales than what it was back here, 2006 to 2007. So, you know, if the consumer, going back to this year, the consumer credit card debt declines for a second time in the past 3 months, signaling plateau in borrowing. Does that not signal a plateau in retail sales? Let's drill down. 5-year view. So with all that's going on, with inflation that's going to be ramping back up again, the only hope that you have here is that credit card interest rates come down to a point where it spurs on new spending. I doubt that, though. I doubt that. It's not going to be enough. The only thing that's going to help resolve this to the upside on retail sales, again, let's pull back to get a max view, because this would be a beautiful breakout. But what would cause that breakout? Only one thing. Only one thing. This. This is the Federal Reserve's balance sheet. And let's take retail sales for a moment. Let's move them closer. So here's the Fed's balance sheet. Excuse me, that's retail sales. Here's the Fed's balance sheet, and they spiked it up. They started QE. Why did they have to do that? Because they didn't have control. They didn't have control of, where is it? The 10-year yield, or I shouldn't say that, longer duration debt. So what do they need to do? They needed to start the printing presses. And what did that get us? It got us a new bull market. And of course, after crushing retail sales here, all of a sudden they ramp back up again to new all-time record highs. Why? The Federal Reserve had to start up the printing presses. Guess what's coming? If they can't get foreign buyers to buy our debt, because we've gone completely insane now. We've gone completely insane. We send billions all over the world, hundreds of billions of dollars. We can't afford more than $750 maybe for qualified household for people who have been wiped out, Americans who have been wiped out. Anybody out there that hasn't thought, even the communist Chinese would take care of their people better than we do here. Who's going to loan us debt for 10, 20, 30 years betting that we're going to be able to repay it? They're absolutely insane. There's only one entity that's going to be able to do that. And guess who it is? That's the Federal Reserve. Get ready. But they're going to need an excuse. They're going to need an excuse because they just cut interest rates. They claimed victory over inflation. They're going to need an event. And what that event's going to be, could it be Hong Kong? Could it be mainland China? I don't know. I'm not that smart. I just know we have plenty of pins out there to burst this balloon. I'm just not that smart to figure it out yet. I just have my suspicions. And what else we could use to validate those suspicions is this. The yield curve this week which was down up until this morning on the week is up over 205% on the week. Look at this hockey stick up. So on a monthly basis, we remain down on the month, but we are well off the lows of the month. And it is very, very early. And this is the reason why I did not want to go buying this breakout on the market. So, well, technically we did buy software as a trade, but to invest longer term, no. I bought more bonds, to be honest with you. Let's go to the weekly charts. Let's do a few charts there. Then we'll go to stock chart requests. And let's just take a look at how they close the market out today. See how they're going to close this out for the week. We do this because what we want to do is understand the sentiment of the market at this snapshot in time and then prepare for next week. We do that on Thursdays. And on the bullish percent index, this has come in somewhat, but we're still rather elevated on this index. And you may be thinking, wait a minute, it's high. Isn't that a good thing? A lot of bulls out there. No. That's not the contrarian thinking. Contrarian thinking understands once you get too many bulls, you got to go the opposite direction. Put call ratio bouncing off of extreme lows. Michael Anthony, hey, which software did you buy? I bought IGR. I spoke about it on Sunday Night Futures Live. I also spoke about it on, I did speak about it on Best Stock Charts for the new trading week, IGR. We're going to go over it in a few minutes. Now, I found this surprising. The CRB Commodity Index did not rise today or this week. It's actually now reversed, be down on the week. I found that very, very surprising. Why might that be? Well, what's in this index? You have commodities, copper, perhaps. I don't know how copper closed today. We'll have to take a look at that one. Let's check it out. I don't know how much of a continuous contract copper. Copper's been down on the week. It's not a daily story, it's a weekly story. So what I think that the markets are sniffing out here is that growth is not what is going to be as expected. And so you're seeing the CRB commodity index come in a little bit because the demand for commodities is not going to be what one might expect. Now you have the DBC, which Franklin was asking about over the weekend, and we did this live. We did some analysis of the components of the DBC. Now, this is mostly oil and distillates, oil, gasoline, blah, blah, blah. We're breaking out. So your commodity index that you would hope is rallying because you have demand, because you have an expanding economy, is collapsing. Well, not collapsing. That's hyperbolic. We don't do that here. It's got a down week, okay? Whereas your oil-based consumer products, yes, they use industrial refining, not refining, in manufacturing and whatnot, but this impacts the consumer quite a bit. The consumer just doesn't go out every day and buy copper, right? They go out every day and they buy oil. They go out every day and they buy gasoline. So this is going up. So if the CPI this month was high, what's it going to look like next month when they report out on oil prices on next month's CPI? So if these two go moving up in tandem, CPI is going to do a blitzkrieg up higher. So this may counterbalance oil. But man, if these two start going up, and I bet you if the Federal Reserve starts buying more debt to stimulate this economy, both will be ripping up higher. What do you got to own? You got to own gold. Gold was down 41 bucks as of yesterday, down only 28.50 on the day. We bought it this morning more. Well, I didn't own any futures. I own gold, the physical, but I did not own the futures until this morning. And on the day, we recaptured support. They're probably going to pull this back and do a retest tomorrow, but I think that we're going to break out to new all-time highs very, very soon. Why might they pull it back tomorrow? Two reasons. One, technical. The other, probably the catalyst, PPI. Let's take a look at what tips did. We already went over the dollar. Tips are up on the week, bullish, key reversal on the day. Bullish key reversal, consolidation, nice cluster. This goes up. Euro down on the week. Really? Yen up, maybe? Yeah, yen's up. Okay, that makes sense. All right. I knew one of them had to be up. Volatility on the week. We broke out last week, and we got a continuation breakout this week. How do we close on the day? Doji star formation, a sign of indecision. Let's chart this. They could easily break this out. I don't think they're going to. I think they're going to rally the small caps. I think you're going to get sector rotation. Transports, weekly chart. Thus far on the week, we have a breakout. On the day, we broke out on Monday. Actually, no, I'm sorry. We broke out on Tuesday. Wednesday, continuation move. Today, a pullback and a bounce off of support. This may move up higher. Dow Jones Industrial Average broke the wedge formation today. Managed to close up, but it traded outside of its wedge formation, the lower band. Does it tank? I don't know. We'll see. If we break down below today's lows, bet on a correction. Volume on the, this is a weekly chart, no less. Volume on the week is extremely light. I mean, they're not going to be able to make this up tomorrow. Daily chart, we closed down on the day. I thought I was on a daily chart before. Not a horrible day. Closed down fractionally. How was the volume? Light. S&P 500, still no breakout here on the week. And although we made new all-time highs. How's our volume on the week? It's pathetic. You know, we were talking about this last night on Market Wrap. So the volume that we're seeing, at least on a daily time frame, as these stocks break out, is just, it's ridiculously light. It's horrific. So this is a clear example of what you do not want to see when you have an equity market that's breaking out to new all-time highs. This is not institutional money. This is mom and pop retail and computers bidding up the stock market, setting everybody up for a nasty, nasty rug pull. I'm not going to argue. I think that stocks can still move up higher. I said it over the weekend, and I stand by it today. Hell, we bought stocks. We bought the software ETF just the other day. So we'll ride this for as long as we can. But we took shorts off the table about 2 weeks ago now, and I've plenty of capital put to work to the short side, and I'm really looking forward to that. Let's take a look at, what the heck is this? RSP. My boy. Come here. Come on up. Come on. Come on. I just got a visit by my boy. Okay. 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 We're live. We're live. This is Buddy the stock dog. Okay. 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 All right. Sorry about that. That's my boy. All right. So, Trip Qs. What are you doing? Trip Qs. Weekly chart. It's a beautiful chart here. I mean, no doubt about it. Let's go daily view. I mean, really flat on the day. I think what we had today was a market that is just waiting on the PPI data. So, you know, let's do this. Let's do this. Forget about the PPI. Let's forget about the CPI. Equities want to go up. Everything else is noise. This chart here says, I want to go up. Therefore, in all probability, it's going up. There's your uptrend channel. And we're at the lower band of it. Do I short this? No, you can't short it. This is the equal weighted fund. So even the equal weighted stocks are in the QQQ. So here's cap weighted, capitalization weighted. So what leads the QQQ? Apple, Microsoft, right? Those are the two biggest components. Here, all 100 stocks are weighted equally, and we're seeing no divergence here. In fact, we made not a new high, but we closed. We're up on the week. Actually, I'm sorry. I keep thinking about the daily chart. We're up 1% on the equal weighted, up 1.08%. So about the same on the week. Let's take a look at the daily chart. We closed up on the day. The equal weighted, they closed positive. They want to go up, folks. They want to go up. And I think they're going to do sector rotation. What's going on here? So on the week, the TNA, this is the leveraged product small cap fund. is down on the week. I think we need to start looking at buying. As long as they're going to let this equity market rally and the promise of yield cuts, rate cuts are going to come. At some point in time, we're going to get a breakout here. It's going to happen. They're probably going to have to get the 10-year yield under control. It's going to be difficult for the small caps to break out with a rising 10-year yield. But I think they're going to break them out. This is an island reversal. Light volume day. Let's see how they close them out. Let's go 30-minute view. Good close on the day. So the small caps are looking pretty good here. So I think they're going to sector rotate. I think they're going to continue to drift the Q names up higher into earnings. Once you're going to get the banks that come out first, they're going to start, I think this week, as a matter of fact. Did I go over earnings? I don't think I did. Yeah, they begin on Friday. JP Morgan Chase, Wells Fargo, BlackRock, they report on Friday, and we get more big banks early next week. And then after that, you're going to get the regional banks. So watch the KRE, the regional bank index. And then we get really the blitzkrieg of technology stocks, in particular, triple Q names. Financial sector, down on the week so far, but still looking good. Morgan Stanley so far, a pretty good week. Technology doing well on the week, up 2.27%. Semis up 2.76%. They want to go up. We spoke about this last week. The Dow Jones index, not cap weighted. We spent a lot of time on this for 2 days. And look at this. This is a weekly view. And we have a bullish key reversal bar off of a lower band of support within a triangle formation. We're breaking out. Daily view. So the product, you can't buy this, but the product you can look at is IGR. IGR, we're going to go over it in a minute. As a matter of fact, let's bring it up now. Here's a daily view of that index. Let's bring up IGR. No, that's not the right symbol. What did I do? Let me bring it up. Let me bring it up in my portfolio. IGV. Sorry, IGV. My apologies. IGV. So who did I confuse here? Michael. Yeah, Michael, my apologies. IGV. Barbara, sharp as attack. You are exactly right. Thank you for that. Michael, I like your dog and get all over. Yeah, he's a good boy. He's a real good dog. He's half Great Pyrenees, half Black Lab, if you could believe it. We met his parents. Biotechs, down in the week. They're not as short, though. Staples, nice pullback here. I'm not ready to buy more. I think they could pull back further. Discretionary, I hate this sector. Emerging markets, dollar up, emerging markets up. Shocking, but it's getting stronger. This is a sector getting stronger. Emerging markets with China. This is without China, up nearly a half percentage point. With China down 6% on the week. China only makes up 30% of this ETF, down 6% on the week. This is why I say avoid China. Avoid it. Energy. Broke out last week. No retest. I'm not calling this a retest. I want better. I want to see a pullback to support. Daily view. We may not get it. I may not get, I'm entitled, I feel, to a weekly retest of a support level. I guess the wokeness is seeping into me. I demand that we retest 8750, but the daily chart is saying we don't think so. Uh, go to your cry closet because we're not giving you 8750. So this looks like it wants to go up. Why will it continue up? Oil up nearly 2% on the week, very close to a major breakout. Gasoline prices up 1.22% on the week. Thank you, Fed Chair Powell. When did oil and gasoline begin to start moving back up after their correction? You guessed it, rate cut. Natural gas took a break this week. However, good day today. I did buy a couple of contracts yesterday of the micro futures. I think I'm still down a couple of bucks on this one, but nice reversal day here. I wouldn't get overweight until we get oversold, and we're not there yet. FLNG. We're waiting for a monthly breakout here. We own this. I love liquefied natural gas. This is a monthly chart. Look at this wedge formation. If and when it does break out, it's going to be a monster. Inflation helps lower the debt burden. I believe you are correct. Excellent point. Yes. Then the government could spend more. Yes. And it also devalues the dollars. So the dollars we lent out many, many years ago are worth less. So we're paying back with money that's not worth anything. Okay. Oh, I know I missed somebody. Derek, do you think the VXX will start to tick up with the election and uncertainty? I would imagine so. I've been saying that that the markets will probably rally into and probably even after the election. The Federal Reserve is going to make sure that you have plenty of liquidity in the markets to keep the stock market moving up higher. You're entering November, which is seasonally the best month out of the year. So you have the Fed, you have seasonality. Come January, I think things change. I don't care who's in office. I really don't care who's in office. It doesn't matter because the problem is just too big. And the medicine, even if Trump does get in and we have to swallow the medicine that we're going to get, it's going to be chemotherapy. It's going to be chemotherapy, and nobody wants to go through chemotherapy. So the medicine can be worse than the disease sometimes. And in this case, it's going to be. We did gold. Let's do some chart. You know, gold mining stocks. Beautiful bullish key reversal bar on the week. Folks, if you're not long of gold mining stocks, why are you not long of gold mining stocks? Here's the daily view. Why? You got to buy these stocks. Consult your investment advisor. All right, let's go to our folks over at TrendSpider. I'm going to put up their QR code now. And if you're not using them, folks, you're missing a major arrow in your quiver because I'm going to show you some stocks that we identified as high probability trades, and we'll talk about how they're doing so far on the week. And one of them was IGR, IGV. I keep doing that. My apologies. I'm going to post a link for TrendSpider in there. Make sure I head on over. 35% discount code. Use CON35 to get your discount code, and I give it away free to our silver and gold level members. So check them out. That link will bring you over to this page. Let's get to it. So I ran a scan. Let's clean this up. Okay. So I ran a scan last week and I wanted to identify stocks that were really high probability setups. And I did it using this scan here. I don't think I saved. I'll just run the scan. I'm not going to look for it. I don't want to waste people's times. But a Bollinger Band squeeze, and it brings up all these stocks. And just scroll through. This is looking really good. Arbitr Realty. So we identified several stocks looking very, very good. Let's bring up IGV. IGV. So you can see this is a daily chart. Here's the weekly chart. We were in a nice consolidation. And on the daily chart, we had a Bollinger Band squeeze that's set up right here, beginning on the 4th of October. And this is the exact reason. That scan I just showed you is the exact reason why I found these stocks. I wouldn't have picked them up. Wouldn't have seen them. And now we're profitable on the trades. What else do we like about IGV that causes us to buy it? Well, October is seasonally not one of the better months out of the year for the equity markets. However, IGV is up 71% of the times versus QQQ, which is up 65% of the time. All right, so 6% probability better that you're going to get an uptick on IGV versus the triple Qs. I'll take that. So that's why we executed on that trade. Obviously, the technicals helped out quite a bit as well. So let's take a look at some of the charts that I picked as best stock charts for the new trading week. Datadog, that is up on the week by how much? 6.3%. Nice consolidation. Again, we're on a weekly chart. Nice consolidation. What comes with that consolidation? A Bollinger Band squeeze right here. And now it's begun to fire off. Began here, September the 5th. What else? Cloudflare. Not CloudStrike, but Cloudflare. Another one we spoke about over the weekend. The video, I can't link at the end of this live stream on YouTube, but it's posted on my website, thecontrariantrader.com. It is also posted on YouTube, Twitter, all those places, Facebook. I believe on Facebook. Bullish key reversal bar. We are up 11.13% on the week, all because of this scan. CRM on the week is up 1.34%, a laggard. But here's the good part about CRM is that we broke out last week. This is a retest. I'm still liking CRM here. I think you have more up. Oh, damn, you have more upside here. CRM is looking really, really good. So consolidation, breakout. I think CRM is going to break out here. What else are we looking at going into the new trading week? MSTR. Now, this one I haven't looked at. It is up, but this is heavily weighted through Bitcoin. It's up 2%. It was up higher, but it's failing to break out. So I'm not enamored with that one right now. I don't know how Bitcoin closed today. As goes Bitcoin, so goes MSTR. MSFT, we have a position here. We sold puts. So that's technically a long position. I'm not loving Microsoft at all here, to be honest with you. Let's go to a daily chart, see what they did today. Lethargic. So Microsoft, the play is that we would get a rally after we got annihilated last week. So we got that rally. Uh, until we break out, I would not buy this stock. I would not do it. So be careful. And plus, you have earnings coming up. So the market's sending signals here about Microsoft. Something's wrong here. So buckle up, and I may even take that trade off the table. I'm not liking Microsoft. So let's go over to let me refresh, because you need to refresh this, because half the time I leave people unaddressed. Okay, good. Talon, glad I checked. Meta. NVIDIA. SCHD. SCHD. I want to go to that one first because Franklin intrigues me sometimes. I like it. See, he did it again. Interesting. We're going to begin with this one. What is this yielding? (3.16% yield). Let's go monthly view. So you have had a Bollinger Band squeeze set up here. Bollinger Bands in red, trading inside the Keltner channels. The Bollinger Bands are beginning to widen out. Moving averages stacked positive. We're consolidating 1, 2, 3, 4 months now. It's going up. It's going up. As long as the markets hold up right now, small cap, this is going up. And especially if they go back to money printing, you're going to want to own this, because the small caps tend to outperform their overall market 6 months after the Fed's first rate cut. But what usually happens between the first rate cut and the 6 month period, we usually get a stock market crash lately, and the Federal Reserve starts up the printing presses, and the dog and pony show begins all over again. So I'm bullish here on SCHD. I think it's a buy. I would dollar cost average in. CRM, Salesforce.com. Meta, for good old Talon. So monthly chart here, you're not shorting this. We broke out in September, retested in October. They're reporting earnings soon. I would not short it. On the week, it's not doing much. The path of least resistance remains higher. If you're looking to put on a bear trade here, I would do so with a call spread, a deep out of the money call spread. I would have insurance. I would not sell naked calls on this. Otherwise, right now we're in a rising wedge formation weekly time frame. I would not buy it here. I'd look to buy it back down here, 565.75. Why? It marks two intersecting support levels. One, the rising lower band of support of our current wedge formation. It also marks the prior upper band of resistance of its old wedge formation, now acting as support. Very rock solid support below here. Daily view. It's consolidating. It's probably going to break out. If the market breaks out, I think Meta breaks out. Those Meta glasses are very, very popular, and they're probably going to do pretty well on earnings. My brother's got them. They're pretty darn cool. We're going to leave it off tonight, folks, with NVIDIA. NVIDIA is a buy. I looked at this chart earlier today. It broke out yesterday. We'll call this a retest today and a follow through. Stokes moving up. It's bullish. It wants to go up higher. Daily view. Bullish key reversal bar on the day and a new daily closing higher high. Bullish. Folks, don't forget, TrendSpider. Use the link below. Get 35% off. Discount code CON35. You want a 14-day free trial to it? Sign up, The Contrarian Trader. I give a 14-day free trial offer. Link below. And don't forget, everyone, join the community. It's free. Head on over to Bull and Bear Banter. That's our chat room right down here. Make sure you say hello. Far too many people join, and they don't say anything. So sign up, say hello, get involved. Great people in there. Everybody have a profitable trading day tomorrow and have an awesome weekend. Thanks for being here, and I will talk to you soon. Be well.